Let's take a look at the stock of Nicola and see what's happening with it. We'll examine its volatility, look at the options chain, volatility, smile, liquidity, and also assume and devise some interesting strategy with the options. Let's start from the beginning. What kind of stock is this? Nicola engages in the provision of zero-emissions transportation and infrastructure solution. It designs and manufactures battery electric and hydrogen electric vehicles, electric vehicle drivetrains, vehicle components, energy storage systems, and hydrogen fueling station infrastructure. The company was founded by Trevor Milton in 2015 and is headquartered in Phoenix. If we touch upon its financial indicators, then it's quite dismal. The company is deeply unprofitable with serious debts. Currently, its market capitalization is just under $1 billion, or to be precise, around 800 million, while its revenue stands at 36 million. However, the company incurs very serious losses. It has a very negative margin structure. We also see that all investment funds, all banks mostly downgrade this company. There's nothing good to foresee here. Let's look at its volatility. What's happening here? The volatility in the options market is very high, reaching up to 180%, but at times it drops to 120%. Let's look at the volatility smile. Actually, as we can see, there's no smile here. It's just a straight line. Rarely you'll see such a thing, but again, I'm showing you specifically that such cases also occur. As we see, the volatility here is very even. It won't be possible to devise any option strategy both at the lower and upper strikes because the volatility here is the same. Let's look at the open interest in options. As we can see, there are seemingly very few contracts. In fact, the stock price is very low. That's precisely why the contracts are very cheap. The main volume in the options is concentrated at the $2 level. Let's also look at the historical and implied volatility. As we can see, the current volatility is just in a straight line. Implied volatility mostly increases from 70% to 145%. What can we conclude here? We can see that at its peak in 2020, it was almost $100 from current value. This represents about 16,000%, which sounds very interesting, but I wouldn't recommend getting involved with this company, and I'll explain why. I remind you that the main goal of an investor is to make money, as well as to preserve and not lose it. The question is whether you can make money with this company. It's a rhetorical question, especially if we look at the options chain. There's really no sensible, normal strategy to devise here. And I remind you of my philosophy that it's impossible to predict price movements. The most important thing is managing positions. I have no idea where this stock will go. Again, it could start rising up or start falling down. The most important thing is smart position management, but in this company, you can't manage positions properly because there are hardly any positions to manage. There's nothing you can do here. It could very well continue to fall, and there's plenty of room for that. It could also undergo a reverse split and continue to fall even further. The question is what strategy could be interesting here. But again, if you believe in the company's growth, it's purely speculative. You can simply buy calls. I remind you that I generally don't recommend anyone to buy options, especially naked options, as they are very risky and mostly lead to losses. But if you do consider buying options, I would recommend buying options with a long-term horizon, at least for 305 days, preferably for 670 days. This is much safer. Yes, they are very expensive, but they are much more attractive. Well, we can focus on options for 305 days. Here you can simply buy regular calls, for example, with strikes at $2. Also, personally, I don't have this company in any portfolio. I don't apply any strategy to this company. And if you do decide to buy options, then by no means buy more than 5% of your portfolio. Yes, this option can be used simply as a lottery ticket. A lucky ticket. If you're lucky and NIKOLA Stock grows very strongly, then yes, you can earn very serious money. But again, if it grows even to $10, then you can earn $800 from each option, having spent only $10. Understand, the risk to reward ratio is simply incredible. Well, here it's just $3. If Nicola grows to $3, and that was literally in August, then you will earn around $90 per option. This is very serious, but again, under no circumstances, do not buy a lot of your portfolio. 5%, 2% of this will be quite enough. Well, again, I want to remind you that the company is quite dangerous. There could be a bankruptcy here and then you will lose everything. Well, could there be a short squeeze here? It's hard to say. Actually, only 18% of the shares are shorted. That's not much. But again, if there are some very bad rumors, for example, about bankruptcy, then we can really see some short squeeze, possibly down to $2. Again, this will be covered short before the company goes out of business. Well, such a scenario is possible. So don't be surprised that on some news it can grow very strongly. But I would recommend you to watch this video. There I talk about 5 stocks that have huge growth potential. You can really make money there, unlike with NIKOLA Stock.